Well, we have Andrew Holland, Chief Executive Officer, Avendus Alternate Strategies, with us. Andrew, good to have you with us here. Thank you very much for your time. You know, it's looking reflationary, isn't it? There are these intermittent bursts of doubts which come, but it's basically back to 2021 kind of mood. You know, dollar is up, equities are up, and, you know, cryptos are booming. I think Bitcoin is up 40% this year so far. Your thoughts briefly to begin the discussion before we get into individual sort of themes and sectors that you're betting on.
Yeah, no, well, we're being dragged up by global markets, aren't we? I mean, I think our market was up, what, 1% and a bit last month, but if you look across the rest of the world, markets are up anywhere between 4 to 10%, with China being up 10%. So, you know, whilst we had that kind of love India, you know, don't love China, the markets are performing ours at the moment. So, you know, that goes to tell you what the markets are doing. Just globally, it's really kind of any news is just seen as good news, so it doesn't really matter at this point. I think the market today is probably going to reflect a few things. One, I know those blockbuster GDP figures look great, but scratch below that, and you actually see that consumption slowing down. So I think the market's probably going to pick up on this and think about whether the RBI can go ahead of the Fed in terms of reducing rates. It's an interesting question. They can do it if they want to. And maybe that's why you're going to, you know, kind of the interest rate sensitive, maybe the banks moving a little bit higher on the back of that kind of thinking.
Okay, well, by the way, it's record highs for Zomato. What a dream run it's been for this stock. 172 now. Who would have thought, right? It's up 4% today, and it's had a fabulous run this year. I mean, this month it's up 25% or 23% already. A big move coming in there. By the way, Andrew, hi, good morning. I wanted to talk a little bit about auto stocks as well, because decent numbers coming in from some of the two-wheeler names. And the big improvement is seen in exports, right? So for Bajaj Auto, while overall numbers, domestic numbers are up 25%, it's exports that have gone up 10% as well. Do you think there's more to go in this rally?
Yeah, it's been, I mean, the overall kind of auto sector has been, you know, kind of a bit of a laggard of recent weeks because of, you know, slowing consumption, obviously competitive, you know, kind of negatives around EV and so forth and so on. So I think it's probably going to be one of those rotational moves into autos away from some of the other sectors which have done well. And I think, you know, probably, you know, we saw a few months ago IT doing well. I think the headwinds are still there for the sector. So everyone's just moving around as the market kind of consolidates around this 22,000 level. But obviously there's gains within sectorial kind of switches rather than fundamental changes in the sector in the very short term.
Hi, Andrew. Morning. Nigel on this side. You know, the Nifty, the headline index, is making fresh all-time highs, but the Nifty Bank actually is still 3.5–4% away from its fresh all-time highs. I think you were sounding a little bit cautious on the banking space. What's your current view on the banking space here in India, and what's the preference out there?
So, Nigel, it's all about interest rates. I mean, you're seeing more and more reports, you know, about the banking sector with NIMs under pressure, deposit growth under pressure, everyone racing to the bottom to try and get deposits. And that's not going away until, you know, you start to see interest rates fall. But what the budget did, what the government's, what the RBI is doing, I think all points to lower, you know, bond yields. So that gives the RBI the scope to kind of reduce rates. And I said before, if you scrape below that headline figure of GDP, you've got a slowing economy. And that's the catalyst, I think. If the narrative changes that interest rates are coming down or bond yields are going to fall below 7, the banks will do well. So if you believe that's what could move that 3.5% higher for the banking sector in the very short term.
Okay, that's on the banking sector, and we also spoke about the auto sector. The other space that everyone's been talking about is the PSU space, right? Not just banks, but some of these other verticals as well, like defense, etc. So I wanted your thoughts on how to approach that entire space now. Do you see more legs there, or do you think the run is done?
Yeah, I'm a little bit more sceptical on the kind of overall broad brush approach of governance in all PSUs has changed completely. I'm not on that camp, but what the camp I am in is that if you take the defence sector, which you mentioned, Sonia, it's a long runway that we're on here. The government spending will continue to be increased very, very significantly. So therefore, PSUs within that defence sector are one of the few ones that you can buy anyway. So, if you believe in the long-term future, then these are the companies you would have to buy. So I'm not concerned on that, but I'm not playing into this governance has changed and therefore we should give higher ratings.
Okay. But all right. That's interesting you say it. By the way, hospitals, Andrew, do you have a view? You must have seen the news flow around it, right? The Supreme Court directing the centre to actually standardize rates for medical procedures. And this has kind of raised the risk that there will be, it'll be regulated. For private hospitals, for example, we spoke with Narayana Hrudayalaya, who, quote unquote, not my words, his words, he said if this goes through, this is like an Armageddon event. But your thoughts, Andrew?
Well, Armageddon is probably summing up the worst fears, right? Listen, I'm not an expert on this. There's obviously a lot of government regulation around it. Not all states have adopted that regulation. So I think we're still a long way from what's going to happen here. So again, until you know what the government response will be, it's difficult to kind of take a reasonable call. I would just sit on the sidelines and wait. I don't need to do anything. I'm not in the hospital stock, so I'm fine with that. But what I would say here is that as with everything, the ratings of these stocks was very high, and it doesn't take a lot to kind of knock it down. With any kind of negative news. I'm sure it won't play out as the Armageddon story, but it's obviously when you have very highly valued companies, there's not much margin for any kind of negative, which could hurt the earnings.
All right, Andrew, it's a Friday. Let's talk about more fun things then, and a space that I think you were quite bullish on, the travel leisure space. That's come back, and that's come back in style. I spoke to Thomas Cook, which has obviously has various verticals that are related to travel, and never heard them sound so bullish. What's your view out there? The problem is some of these stocks have already seen a big run. But now, as we know, travel may not be seasonal, it may not be optional. It's almost become a compulsion. How much of it is in the price, though?
So, Nigel, when are you traveling next?
Tomorrow, but not too far, domestically, which is something that I would normally not do. I traveled last weekend, I traveled even the previous weekend. And the middle of the year would be the international travel, but that's not something that I normally had on my radar as well. But me aside, you're seeing that unwind, the need for leisure, the need to travel. So your view on the stocks?
No, I'm very bullish on this whole sector, and will continue to be. There's not that many new hotels in the major cities to coming on stream. So. Operational gearing revenues will be huge for the hotel sector. I also think as well that we haven't seen the international travelers into India kind of reach the kind of pre-COVID levels, and that's still to come. So expect this sector to witness very, very high growth. And every time I listen to Puneet Chatwell from Indian Hotels on any of your channels, is hugely bullish about what's going to happen going forward, not just on the kind of hotel revenues, but everything around experiences. And again, if you go and speak to any of the kind of beverage companies, again, it's all about experiences, premiumization. So there's a big change, and Nigel, you're part of that change. You're doing it yourself.
There's no surprises, right, that you've seen the Indian hotel stock double in the last 1 year. A year ago, it was just about 300 rupees, almost touching 600 right now. So we have people like Nigel traveling every weekend.
Andrew, I'm in good company. I normally come off after the weekend and say, it's so good, Arsenal won, or there was a good game. And then Sonia says, where I went off? I was at Bangalore, I was at Pune, I was at this and that place. So it's a positive rub-off for me as well. And, I'm trying to cope up.
I think everyone needs to just get out, right? After COVID, it's like this pent-up demand. I mean, it's been 3 years since COVID anyway, but we're still talking about pent-up demand. But anyway, Andrew, have a great weekend. Thanks a lot for joining in. Appreciate your time here on CNBC TV18.